So in the last video, we looked at key levels and how key levels add confluence to your high probability swing trades. But what if you've mapped an entry on your execution time frame and you want to further refine to get a better risk to reward in your trade? It's possible. So I swing trade. Traditionally, I use the 12-hour time frame as my execution to take weekly, 2-weekly, and monthly swing positions. But once I see something playing out on the 12-hour, I have the option to drop into the lower time frames if I want to refine my entry. So before we look at that, let's just touch on some theory. So what is lower time frame refinement? It's essentially dropping below your execution time frame. So for me, the 12-hour time frame. So it will be onto the 6-hour, the 4-hour, the 2-hour to refine your entry into a trade that already exists on your higher time frame. So this gives you a tighter entry, potentially a tighter stop loss, ultimately a better risk to reward. But full disclaimer, it is not essential. 9 times out of 10, I just execute on the 12-hour because I can open the chart, review at 10 a.m., close the chart, and I'm done for the day. I don't need to sit on the charts all day. But sometimes it might warrant dropping down into those lower time frames to wait for a better entry, and that's always an option. Let's just quickly look at some visualization of this. Price is ultimately fractal. So when you see 12-hour time frame doing its thing, you can drop down to even lower time frames to see what the lower time frame price action is that makes up the 12-hour candle. Price is fractal. So in the same way we're using 12-hour to plot our next move on the weekly, 2-weekly, and monthly, the 6-hour, 4-hour, 2-hour, 1-hour, 15-minute make up our 12-hour candle. Price is fractal, so we can use the exact same logic to drop down timeframes. So what to look out for? First and foremost, if we're swing trading, we need a higher time frame setup to be confirmed. This is not changing strategy. This is waiting for the same higher time frames, weekly, 2-weekly, monthly, to manipulate and then look to distribute. In my opinion, we need to wait for 12-hour price action to be confirmed because we still want to take those high probability trades in line with our execution time frame. Once we have that, we have free reign to drop into the lower time frame to refine entries. And that's what we're going to look at right now. So we've covered this example in detail. For those just joining, we're looking currently at the 12-hour time frame. We have our weekly order block, which is the last sell candle. So behind here, you have the weekly time frame. Sell to buy, close above. So this candle closed above its previous candle's range. Price is then in a down trend to mitigate the weekly order block. It liquidates its previous candle. So price runs into previous candle's low. Then we get our structure shift. We get a close inside our previous candle range. We have order flow, which we can use to take long entries. So we have everything we need. We have a higher time frame context. We have accumulation, manipulation. Now we're anticipating distribution. And 12-hour price action is in our favor. So we've seen an order flow shift. So let's first mark our 12-hour internal range liquidity. So this is our order block, the last sell to buy candle. So this is our 12-hour order block. We want to make sure that this is visible on all of the lower time frames. So we'll put it on the minute time frame and the 1-hour time frame up to the 12-hour time frame. So that's there. Secondly, we want to look at other points of internal range liquidity. So right here we have our fair value gap between candle 1 and candle 3, a price inefficiency that may be targeted for us to go higher. So again, we want to add that and make sure that it's showing on our lower time frames. Once we've done that, we can drop down. So now we're looking at 6-hour price action, and it is exactly the same price action, just looking at lower time frame candles. So from a 6-hour perspective, there isn't too much to change right now. We don't have a 6-hour fair value gap in this price leg. We have a 6-hour order block right here, and then the two candles, these two down candles, make up our 12-hour order block. So I'm not sure this gives us too much from a refinement perspective. So we can drop down again. Now we're in the 4-hour. Okay, now we have something that looks a bit different. So we have our liquidation. Let's actually mark that in green. So price has raided below the previous low. We have now very bullish 4-hour price action. Price is now in a downtrend into the 12-hour fair value gap. So if we're now on the 4-hour, we can simply wait until we have some kind of structure shift. If you haven't seen our structure shift video, head over. It's in this series, and we look at the 3 different types of structure shift that we can use to take high probability trades. And right here we have an order block creation. So price moves in a downtrend. We then get an up candle. Price tries to move lower and then closes right here above this last sell to buy. So now we can mark this as a 4-hour order block right here. So this becomes our 4-hour order block. And this is something that we want to show up to the 4-hour time frame. It's not relevant on the 12-hour time frame. So now we have new context once we get this candle close to take a new entry. So we can set our long position here and we can cover the order block, the internal range liquidity that has been created in the close of this bullish candle. Price immediately wicks in and enters us into the trade. Where is our target? It's the exact same target that we looked at on the 12-hour time frame, because we have accumulation, manipulation, shift. We're now reacting to shift bullish to move into distribution. Now we're looking at 5.5 hour trade. Previously, this was a 2.5 hour trade on the 12-hour time frame. We can, again, drop down even further into the 2-hour if that's something you want to look at, or even the 1-hour time frame. We start to see the exact same thing. We've got price coming down into the 12-hour fair value gap. We try to go lower, we shift bullish. That's the 4-hour close. But we also have, if we look very carefully, I'll just take this away for a sec, the last 2-hour sell candle. So for the ultimate refined entry, because you can keep going with this, but obviously your risk goes up, but that is the last sell to buy candle on the 2-hour time frame. Exactly the same target, 9-hour trade. So that is how to use lower time frame refinement once you have higher time frame confirmation to get into high probability trades with the most refined stop losses. Now, one thing you're going to notice is when price liquidates this original low, we were waiting for the 12-hour to confirm our trade. But you can see on the time frames below, yes, you can take earlier entries. You get a bearish price leg in, close above the price leg, creation of a 2-hour fair value gap. So that is an even earlier trade that you can take to get into swing positions. However, without the 12-hour close, you're front running 12-hour price. So with that comes more risk, more chart management, more chart time. So in my opinion, the best thing to do is to wait, use 12-hour price action to confirm trades. Then if you want more refined entries, do this. Head down your time frames to wait for price to align on the lower time frames and just tighten your stop. We're nearly at the end of our execution series. We've got one more video to go. Stay tuned.